What if RSI lived on your price chart? So every touch of a band meant 70 or 30 in real time. In a few clicks, you'll stop checking a sub-window and start reading RSI directly from price. Clearer context, same math. This isn't just a visual gimmick. This is a structural upgrade to how RSI communicates with price. We're about to connect signals that traders have used for decades directly to the chart itself, so we can finally see where those signals are coming from. Let's get into it. Here's a standard chart setup. Price on top, RSI down below. For most traders, this is how RSI lives. A separate pane, separate scale, and most importantly, separate context. But if RSI is truly a position indicator, then maybe it doesn't belong down here. Maybe it belongs on the price chart itself. Let's try something. Quick note before we begin, this isn't investment advice, just a different lens on how RSI really works. What you're seeing now is a 14-period Wilder's moving average, the same one used in the RSI calculation. And here's the key. If RSI is derived from price distance from this average, then every RSI value corresponds to a specific price level relative to it. That means we can work backwards and figure out the exact price levels that would correspond to RSI 70 or 30, and we can draw that on the chart. We'll do that in a second. But first, let's quickly refresh the real RSI basics. This is the RSI formula from my previous video. If you haven't seen it yet, I highly recommend watching it first. It'll help everything here make more sense. Let's break it down. Distance. This is simply close minus Wilder EMA, the positional offset. Volatility. We use Wilder's EMA of absolute price changes, a smoothed volatility unit. Normalization factor, N-1 or period -1, this ensures RSI operates within a bounded range. Now here's the key point. We're not solving for RSI. We're using the structure of the RSI formula to define price boundaries by offsetting the moving average by a specific number of volatility units, above and below. That's all this is. Moving average plus minus scaled volatility. Simple math, powerful result. And here it is. The green lines you see are dynamically calculated. They represent the price level that would produce RSI 70 and RSI 30, given the current volatility. It's the same RSI, just in a different language. Remember, the formula had an N-1 factor in the denominator. Here's why it matters. These thresholds aren't static. Their distance from the midline depends on the volatility of the instrument and your chosen RSI boundaries. In this example, RSI 70 is 40% above neutral, the midline, which translates into a price offset of 5.2 volatility units. Again, this is pure math. Now we finalize the equations. The upper band is the Wilder average plus the scaled offset. The lower band subtracts it. With these formulas in place, we can generate real-time RSI levels on the chart. And yes, they work across time frames and assets. Here's the result in action. Every time price hits one of these bands, RSI hits your boundary. We're not checking RSI to find signals anymore. We're reading them straight off the chart. It's not just more convenient, it's clearer, cleaner, and context-rich. And you can experiment, shorten the RSI period, widen the boundaries, the script adapts. What you see on screen is mathematically identical to what RSI would show. But now, you finally know why it's showing it. We'll close with a 14-period RSI, but this time with tighter bands, 60 and 40, instead of traditional 70-30. This configuration is commonly used in trending markets, and it's not a new idea. Analysts like Cardwell, Connie Brown, Hayden have written about the strength of 40-60 zones for years. They emphasized that in an uptrend, RSI 14 we'll often find support around 40-point level, and in a downtrend, resistance near the 60-point level. Now, instead of watching RSI dip or bounce in a separate pane, you can see exactly where price needs to go to confirm these shifts, right on the chart. So where does this take us? We've taken RSI, a classic tool, and pulled it out of the sub-window back into the world of the price action. We've given it structure, location, and clarity. This new formula is available on TradingView, so feel free to test it yourself. Just search for RSI chart overlay in the indicator section, add it to your charts, and explore it on your own terms. The good old RSI is far more versatile than most traders realize, if you know how to ask the right questions. If this video challenged the way you think about the RSI indicator, consider subscribing, because we've barely scratched the surface.